In today's weekly Forex forecast, we're talking about the DXY, the Euro, the Pound, the New Zealand dollar, and also gold. As the Forex market remains mostly sideways, however, I'll have all the details in today's video on what to watch for next week. Now, if you want my help with your trading, including seeing my trades live, also VIP-only videos, real-time trade updates, all in Discord, and also full access to the course, be sure to check out the link in the description of this video for 85% off. All right, guys, DXY here on the daily time frame. So it is Friday. We have a few hours left in the session, so keep that in mind as I move through this. But we did have NFP today. Now, NFP numbers came out disappointing compared to forecast numbers. And so, of course, we are seeing the US dollar rotate lower. Now, for the most part, obviously, this market has been very sideways for the last few weeks. All right, so really tough trading conditions here recently, unless you're a range trader who likes to buy down here and short up here. It has worked out relatively well for you. However, even that, guys, has been difficult simply because of how choppy the market has been within this range. So even if you're somebody looking for, longs down here and shorts up here, again, it has been kind of difficult just because of how back and forth the DXY and the overall Forex market has been over the past few weeks. Now, looking at the current conditions here, again, we do have a few hours left in today's session, so keep that in mind as we move through this. But right now, 97.70 is still serving as support here for the DXY. So you can see that going back here to August, we have this level coming in as support. We have resistance up there at 98.6 that we've talked about. So right now, again, a very range-bound market. Now, one thing that happened on Friday that to be aware of here is the unfinished auction from back here. So we talked about this 97.43 level in the past. And what this was here, guys, was an unfinished auction, which means that based on the market profile, down here at the time in late July, it looked like sellers were not finished during that time. So you tend to see areas like this get revisited by markets, and that's currently what we saw here from the DXY. Now, this bounce right here from this level is not a coincidence. A lot of times these areas also serve as support or resistance. Okay, so with the DXY holding above this mark, again, we are just looking at a range-bound DXY going into next week. So as long as the DXY stays within this, then in my opinion, it's best to treat this as a range, because a market is range-bound until proven otherwise, right? So as long as the market is within this range, you're looking at, potential move back here toward the highs. Now, if we get the breakdown here on Friday going into that weekly close, so if the DXY does break below 97.70, either, today or sometime next week on a daily closing basis, then that could potentially open up this area down here at 96.70. So as we've discussed in recent videos, this area down here is interesting simply because if you go to, let's say, a monthly time frame and move all the way out here, this is the bottom of that 2011 channel. So you can see off of these lows from 2011, you've got the lows through here, you've got these recent lows, and then you have all these highs up here off of this equidistant channel. Okay, so this area down here at 96.70 or so is going to be the bottom of this channel in September. So the point here is that if we see, okay, still a big if, but if we see the DXY break below here, then your next target is obviously lows like this back here, but also this region right down here in this area, because we also have unfinished auctions from back here in early July, right around 96.80, down toward about 96.60. Okay, so I'm not saying that this will happen, but if we get a breakdown here from the DXY, this would likely be your next stop. Now, if, like I said, we get the market holding above here, then you're looking at a range-bound market going into next week, and a break above 98.6 would open up this area up here that we have not seen revisited yet following the failed break from back here in July. Okay, so the DXY failed to hold it back here on this candle. This right here is actually an error from TradingView. Guys, the DXY was never up here. So you have this failed breakout above this area around 99.35. And again, we have yet to see the DXY up here in this area. Okay, so really right now, guys, is very, very indecisive, very range bound. So keep that in mind as we head into next week. Now, turning our attention here to the EURUSD, you can see that obviously a big uptrend here in 2025, although for the most part, ever since back here in really June or so, July, the market has just been going sideways. So nothing definitive yet from the euro. If we take a look at this here, you can see where the market, very much like the DXY, is still holding within this range. So as long as this is the case, again, I think that treating this as a range is the best course of action here because there is no confirmed breakout just yet. All right, now at the same time, though, you also have to consider that if you are trying to short from up here, right, you do have that uptrend that's been intact all year long. So even though the market has been going sideways here, for the most part, again, for the entire year pretty much, the market has been trending higher, and this is all just consolidation here for the euro. So we could very well get a breakout here to target that unfinished auction up there around 118, But again, here's the key, guys, is that right now the market is sideways and you have to go with what's on the chart, not what you want to happen. So we have to respect the chart, and respecting the chart right now means that the market is still below resistance, technically. Okay, so it's going to take a close, a convincing close above 117.20, and really ideally this area around 117.30. Okay, so as long as the euro is below this area here on a daily closing basis, then you're looking at a range bound market. If it were to get above here going into next week, okay, then you've got this high back here. You also have that unfinished auction from back here in July right around 118.10. Now, on the flip side, if we get a rotation lower, okay, you're looking at this trend line down here from February, right? We've discussed this in recent videos, but you can see where on Thursday, in fact, the video I made, what I said there was that looking at the 4-hour chart, if you look down here, right, this was the support level that I mentioned in Thursday's video, right? So I said 116.30, as long as we're above this, then you have that potential for the market to come up here and take out these highs. And that's exactly what would happen, obviously, on Friday, where we got the market surging well above those highs and now testing this area around 117.30/20. Okay, so again, if we get the market rotating lower here, closing back below this area, going into next week, then you've got these highs back here, but then you also have that trend line from February. Okay, so it's a range-bound market until proven otherwise, guys. That is the bottom line here for the euro. And obviously, if we were to see a break below this area down here, this trend line over the coming days, then of course that would open up these lows down here. And then you've got that unfinished auction around 115.64. Okay, so all things to keep in mind going into next week. Now, looking at the pound, also very sideways here between 133.80 and 135.80. So this has been our range now for the past few weeks, right? And it's just been very back and forth. The same thing back here, really. I mean, ever since June, back here in this area, we have seen the pound just going sideways. So if the market can get above here, 135.80 above these recent highs, then you have those single prints up here. There's 3 of them, in fact, right around 1.37. So that could become a target. However, the only way that becomes a viable target is if we see the pound get above here on the high time frames. All right, it's going to have to close above here, get a sustained break above here to target those 137 area. Alternatively, if we see it move lower, then you've got this low down here around 131.40 or so. But before that, you do have these lows around 133.80. Now, similar to the DXY, though, we did see last week, actually, the pound take out a significant level. So down here, 133.46. We've talked about this as well. There was an unfinished auction, a poor low down here at this area following the early August breakout. So the fact that, again, the fact that the pound here came into this area and bounced aggressively is no coincidence, because these levels tend to serve as support and resistance. So we've talked about this in recent videos. You can see where we get the bounce right from that area, and the pound did reclaim those recent lows. All right, so again, guys, it is a range-bound market until proven otherwise. That is the bottom line here for the pound. Again, support down here around 133.80, resistance coming in up here around 135.80. Okay, so New Zealand dollar, guys, this one will be pretty quick because it too is very range-bound. And honestly, there's not a lot of levels here that I really love. I mean, you look at the daily time frame, and like the Australian dollar too, it has just been very, very back and forth here, really going back to like May, even April. So not a whole lot to do here in terms of the price action over the past few months. However, one thing to watch over the next week or so is you can see here that on the 4-hour time frame, we do have this really well-defined descending channel off of the high from back here in early July. So you've got this high back here, this one through here, and then you've got these lows here as well, making this an equidistant channel. Now, currently, the market is trading right close, very close to the resistance level up here as we head into the first part of September. So if early next week we do see the New Zealand dollar come up here, maybe go sideways for a bit, and then come up here and test this area early next week, then that could be a potential short, only if, though, the DXY stays above 97.70. That is going to be key for any short here on a pair like this. Okay, so that is something to watch going into next week. Again, a really well-defined descending channel. As for support, you've got the bottom of this channel down here that could come into play later this month. Okay, that's only if we get the rotation lower, though. Some bearish price action from here in this region once we get the retest, if we get the retest here next week. Okay, so that is going to be something to watch, potentially a pullback here from this area down here towards some of these lows, and maybe a retest, another retest of the bottom of that channel. Now, alternatively, of course, if we see this market break out from here, right, and start to close above this, then you've got these highs back here to target. Okay, so again, very choppy market, but I did want to point this out because we do have a really clean descending channel off of that high from back here in actually late June, early July. Okay, now looking at gold, This market is a runaway trend right now, guys. We talked about this in recent videos when the market was around 3,400. So if you saw those videos, what I mentioned was when gold was down here in this area, what I talked about was the fact that even though it was still very sideways, if you look at the lows going all the way back here over the past few months, these have been higher lows, right? Higher lows into resistance typically means a breakout is coming, a bullish breakout is coming. And that's certainly what we saw here from gold, breaking above the 430 area, also that 3,500 high, which was the all-time high, currently now making all-time highs here on Friday. Okay, so obviously, I don't have to tell you guys that this is a very bullish-looking market. Obviously, you do not want to be trying to short a market like this, especially with gold, just breaking out here, because this market can run very, very quickly and really give you very shallow pullbacks as well. You can see that back here when we do get breakouts from this market, it can take off very quickly. Now, one thing to watch though, in case we do get a pullback, and again, I'm not saying to short this market. I would not be looking to short this. However, if we get a pullback from the top of this channel here, so from the low back here in 2024, you can see where this was the low back here. We had this low, we have this high, and then we have these closing prices through here on the weekly. So this area around potentially 3,800, somewhere in this region over the coming weeks, this could potentially give us a pullback. Now, I am not saying that the market is going to pull all the way back here, okay? Because first of all, you can see where other times, again, when this market gets breaking out, like you have the highs back here, the market broke out and didn't pull back those highs before it continued higher. But what I'm saying is this area up here around 3,800 over the coming weeks could potentially attract enough sellers to where you get at least a pullback or some consolidation. Okay, so something to watch here for gold, but really identifying resistance levels in a runaway market like this, a blue sky breakout, so to speak, is very, very difficult because you don't have anything to work with. If we look at the monthly time frame and go back here, there are no other highs up here, guys. So really, you're stuck looking at either big round numbers, areas like 3,600, 3,700, 3,800, etc., especially 4,000. But also areas like this here, the top of this channel, which could serve as resistance up around 3,800 over the coming weeks. But, really the bottom line for gold right now is that any pullback here on the daily time frame, like for example, if next week we were to see the market close up here today, and then next week we get a pullback down here anywhere into this area, then that could be a potential pullback for a buy, up there toward, 3,700, 3,800, etc. Okay. Just my opinion, guys. Not financial advice, but again, I think that this market is clearly a buy on a pullback kind of market. Okay, now lastly, we do have these single prints down here following this breakout, but again, I'm not saying that we pull back all the way down here. I'd be very surprised if we do. In fact, if we were to see that, then that would probably be the top here for gold, which I'm clearly not saying is the likely scenario right now. All right, guys, that is it for today's video. Again, very choppy markets out there, but the bottom line for this entire video is you look at everything from the DXY to the euro to the pound, even the New Zealand dollar, they're all range-bound markets until proven otherwise. Just respect what's on the chart. Don't assume the market is going to break out any day now. Just expect more ranging markets as long as that is what the chart is showing. All right, guys, have a great weekend. I will talk to you again next week. Don't forget to join us in VIP. Claim your 85% off lifetime access. See the link in the description of this video for lifetime access. Have an amazing weekend, and I will talk to you again on Monday.